The main one is obviously growth in the underlying business. You'll very rarely see a multi-bagger without that. And what you really want to find is that growth coming through, I guess, in three levers, which is the top line revenue growing, but that's also filtering through to margin expansion, which means the profits are growing faster. But then what really drives those big multi-bagger moves is when the multiple the market is paying for those businesses expands as well. So if you can find a business that might be growing its top line by 10, 15%, growing its profits by 25 to 30, but then the multiple that business trades on goes from 15 to 20, that's where you see the big multi-baggers come over time. So that's where my value lens comes back in. I'm looking for obviously good businesses that are ticking those fundamental boxes, but if you can buy them sort of intrinsically cheaper than what you think the market will pay for them as that business executes, that's where you see that real multi-bagger effect as sort of the growth really trickles down and compounds at each level. Yeah, definitely looking deeper to understand what are the drivers of growth and how long can they be sustained. My general rule of thumb when I am looking at more of a growth company where you're projecting years into the future, I try not to look too far into the future. I think 2 to 3 years is sort of where most people can get an accurate forecast, and beyond that you're probably crystal ball gazing, particularly for a microcap because these are volatile businesses. These are businesses that rarely just grow in a straight line, particularly at the profit level, because they're businesses that have to reinvest back into themselves, and while they're small and the profit numbers are small at an absolute level, that reinvestment can be a large chunk of their profit. So as an example, if a business is earning a couple of $1 million a year net profit, but they want to go and put on 5 new sales staff, you're probably going to take a $500,000 hit to your bottom line, which a larger business can obviously sustain that quite easily. For a smaller business, that looks optically like quite lumpy profit margins, but that's where the analysis of the business and the growth drivers that they're seeing, you sort of look through that and you're just looking at the underlying business rather than those reported numbers. And you often get the opportunity from the market in circumstances like that as well. The market may just be looking at the reported numbers or what is the bottom line, and if you can sort of get the edge that that will recover over time, or the business will cease to go through an investment phase, the market will eventually come back to that growth story, and the share price can often do quite well. I'm always looking about 2 to 3 years out, and that sort of time frame gets you a fantastic return if you can compound that over time. You have had a lot of businesses, and Afterpay is the poster child of that sort of multi-bagger effect of that adoption of the product was so quick, and the explosion of not just the share price but the business itself. That's a once in a lifetime sort of stock for people. And so when I see people talk about the next Afterpay or even the next Xero, business like that, which is a bit more of a slower burn, I sort of take a step back, because they genuinely are sort of once in a lifetime stocks for people if you did get in early and hold that all the way. So for me, my multi-baggers are probably much more boring, I suppose, than an Afterpay. It's not that explosive growth. It's not sort of 10 bags in a few years, but it's that sustainable growth. And those numbers I sort of said before, where you can turn sort of 10, 15% top line growth into a real multi-bagger if you can get the margin expansion underneath, but then also you're buying it cheap enough where the market will sort of re-rate that multiple higher. It's the same as sort of compounding over time. You'd be surprised how far what looks like modest top line growth can go with a business that can really leverage it, and if you can buy it cheap enough, then the market gets a bit excited. So my multi-bags unfortunately haven't been the likes of Afterpay, but nonetheless you can still get them over a reasonable time period.